What's up, people? Welcome back to Invest with Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So last Sunday was all about ChargePoint, and why, despite the macro backdrop, I believe we would be moving higher. ChargePoint did manage to go beyond the low year-end target of $17 before pulling back a bit, but still managed to post an overall gain of 15%. If you missed that video, you can go check it out here. Now for this week, it's all about Neo. I haven't covered them since Neo Day on December 18th last year. This has been a rough week for Chinese stocks in general, and Neo has now hit a new 52-week low of $16.07 before recovering a bit in after hours. Now, we haven't seen these levels since summer of 2020. So the question on many people's mind, and yours as well, might be, why is Neo down? Should you buy, hold, or sell? And finally, what can be reasonably expected moving forward, right? Those are all valid questions. Well, those are the questions that I'll be answering in today's video, along with what I'm personally doing about it. As always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so you don't miss out on any pertinent information I'll be sharing. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Neo has had a tough go since the year started, and we're now down a total of 49.27% year to date, but a downward trend has been fairly consistent for over a year now. You can actually go back to January of 2021 when we peaked, and despite the bounce here and there, directionally the trend has been down. So where are we down and possibly heading lower yet? At a fundamental level, it was reasonable to expect that Neo would correct after the parabolic rise we saw in 2020 from the low $3 range, topping out at just shy of $62. That's over a 2,000% increase, or 20 times your return, which by all measures is ridiculous for a company that's not even yet profitable. So reason number one really is people locking in their gain, profit taking, and valuation adjustment. Beyond that, we had a drama around Evergrande defaulting on its debt, which has made anything Chinese almost uninvestable for many institutional investors. That helped drive us even lower last year. And if that doesn't ring a bell, go watch this video here. Either way, that would be reason number two. Reason number three was a concern last year about Chinese stocks being delisted from the New York Stock Exchange. I already covered how Neo has committed to staying compliant. Well, that concern has now once again been brought back front and center to investors this week. The SEC on Thursday announced that they started a delisting clock on 5 Chinese companies. That would be Yum China, which operates the KFC restaurants, Biotech Group Beijing, Zai Lab, HUTCHMED, and ACM Research. None of these companies are directly related to Neo, right? That said, we have officially now Chinese companies at risk of being delisted, and that's enough reason for many retail and institutional investors alike to panic and sell. This, of course, all in the name of managing risk and minimizing permanent loss. Reason number four, and this one arguably is a bit more speculative on my end, it has to do with the fact that China is still conducting business with Russia, and not only that, strengthening their relationship with Putin. Now, I could see how for some investors, that would be a hard pill to swallow, given the current geopolitical environment, right? Basically, some investors are probably using their wallet to express their miscontent at Russia and anyone or anything associated with them directly or indirectly. Now, if you put all 4 reasons together, that's basically why we are where we are. Could we go lower than this? I think there's a high probability we could, yes. And just in case, if you're wondering why I'm sounding a bit off, well, it's because I'm dealing with a bit of a sore throat, so now you know. But as previously stated, Neo has already committed to staying compliant, right? They will be reporting their full year performance later this month on Thursday, March 24 after market close. Their full year result will then be eligible to be audited by the SEC and every other regulatory body. For anyone waiting for the all clear signal, that should be coming in April, May sometime. At that point, any lingering concerns for investors should be squashed. Well, at least until the next unrelated delisting headline. It's important to note that Neo hasn't been sitting idle, right? They have taken steps to minimize the risk of an unwarranted delisting in an effort to protect investor value. As of this week, they have achieved their secondary listing in Hong Kong. Now, for context, the benefit of going with a secondary listing versus a primary dual listing like XPeng and Li Auto did is that there will be no share dilution from the issuance of new shares, typically associated with going with a primary listing approach. Instead, Tencent, which is one of the biggest backers of Neo, will actually be lending just over 41 million Class A common shares to a designated dealer to facilitate the initial transactions. So in short, Neo is getting access to a larger pool of investors, more flexible trading hours, with the same amount of shares available. That's a positive catalyst. NEO consciously chose to go this route because if you recall, they're sitting on a pretty substantial war chest of cash. They had about $7.5 billion at the end of Q3 2021 and raised an additional $2 billion in Q4 last year. Deutsche Bank analyst Edison Yu wrote in a letter to his investors, and I quote, "The overhang over NEO's delisting from the US should largely be gone now, and the focus will shift to the expected ramp up of the production of 3 new models starting in late March." End of quote. Edison Yu, for the record, has a buy rating on NEO with a $70 price target. And this is a good segue into what other professional analysts are recommending you do with this stock. So let's check on that. As of Friday's close, NEO had 13 ratings, 11 buy, 2 hold, 0 sell. Remember that, 0 sell. The average consensus price target is still at $52.59. That, by the way, isn't the all-time high, but would still represent a 227% increase from current levels. On the high end, $87 is projected, and we have a low forecast of $30. Now, keep in mind that returning to $30 alone at this point would still represent nearly a 100% return on your investment, and I personally feel comfortable going on record and saying that we'll at least this year see a minimum of $30 again. NEO has done everything they need to do to reassure me and other investors at large that they would remain compliant. Obviously, I can't control what large institutions with market-moving capital decide to do near term to keep turning a profit, but I'm 100% in charge of my own decisions and taking advantage of a good opportunity when I see it. And this, by all accounts, in my opinion, is a great deal. This sell-off in NEO is no longer driven by the fundamentals of the business, but rather the macro backdrop. So now you can see here on the chart that NEO deliveries continue to increase on a month-over-month and year-over-year basis. The blue bars are 2020, orange is 2021, and green is 2022. Deliveries of the ET7 are tracking to plan and expected to start later this month. So where does that leave me? Well, similar to Virgin Galactic, the recent price decline has brought me far below my personal cost basis. So as funds allow, I'll continue adding to my position using DCA or dollar cost averaging. This will likely mean that near term my NEO position will go overweight within my portfolio, but as the year goes on and conditions improve, I will right size it again. And that's how I think about it. This makes sense to me and my strategy. Now, remember that you don't always have to buy or sell. You have a third option, and that's to do absolutely nothing. Simply hold and wait for better days. That's always an option as well. Now, as I said earlier, I do expect more downside near term before we recover and drive higher. Why? It's simple. Next week on the 15th, the long-awaited outcome of the FOMC meeting will be made public. We should then have an indication of how many rate hikes can be reasonably expected based on what Jay Powell says. We'll start, no doubt, with a 0.25 percentage point increase, but it may accelerate or slow down in subsequent months. Either way, markets will more than likely head down lower as they typically do next week and probably continue sideways through the end of Q1. NEO, as a result, will likely get dragged down as well. Then on the 24th, that's going to be more related to NEO specifically. We have the earning call. That should give us some solid insight into how the expansion in Europe is going and how efficiently NEO has been operating. Now remember that they're not cash flow positive yet, right? So cash burn, revenue deliveries, and projected growth expansion are what matters most here. Assuming the news is good, which I expect it will be, we'll start climbing slowly. The macro picture for NEO improves drastically once the collaborative regulatory picture between the US and China gets clarity, which, by the latest report, good progress is being made on that front. Quoting Feng Jinghai, who's the chairman of the CSRC, or the Chinese Securities Regulatory Commission, basically he's the equivalent of Gary Gensler with the SEC here in the US, and I quote, "There could be a positive surprise by June or sooner," end of quote. And that right there is yet another reason why I believe that the best deals on non-cash flow positive stocks like NEO, Virgin Galactic, and ChargePoint are happening right now. And that's because most people are focusing on safe, quality companies with strong cash flow and pricing power. I've grown accustomed to seeing my portfolio underwater, and it doesn't bother me. The reason is because I also acknowledge that I don't have hundreds of millions of dollars at my disposal. So these extreme drawdowns are needed to allow me to accumulate a significant enough amount of shares to reach millionaire status by mid-decade. Remember, that's my goal. It's also important to remember that ultimately, your odds of achieving outsized returns only improve the lower the market goes near term. As it stands, institutional investors have built in a guaranteed 12% into the S&P 500 and 18% into the NASDAQ simply by selling near term and aggressively moving to cash. That cash will get deployed as the year goes on, make no mistake about that, and we will end up higher, broadly speaking, with each major index posting a new all-time high. The last thing I will leave you with is this. There is a lot of uncertainty in markets right now, and rightfully so, That said, take a look at this chart right here. Things are not nearly as bad as the financial media wants you to believe. On the contrary, the current market conditions is the most accommodative we've had in the last decade, with plenty of room for tightening before it actually becomes impactful. And this right here is why you want to do your own research and not just take what you hear on the news at face value. Personally, again, I'm a buyer at these levels. And on that note, I'll leave it here for today. Don't forget to drop the video a like if it helped you gain a new perspective, and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. As a reminder, I post every Sunday, and as time allows, target one additional in-week video for more crypto-focused content, which, in all fairness, there hasn't been a lot of that recently, so follow me on Twitter for more crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.